Greetings everyone, welcome aboard. Joseph James, GoTrade.com. It's June 21st, 2010. Hope all you dads out there had a great Father's Day. Hope you guys had a great weekend. Let's see here. Had a wonderful room in the trade room this morning. Don't forget, there's a couple important things before we talk about the trades we took today, guys. Another great day in the room, but before we get there, I want to remind you guys of the blog. There are three important things on the blog. The first thing is make sure you follow the blog. Right, upper left-hand corner, click the follow button. That'll allow you guys to follow the blog so you get everything we put out there 24/7. In the upper right-hand corner, you'll see the search box. Guys, if you want to talk about the two-step pattern, you want more information about crude oil futures, you want to know what the three-strike rule is, guys, use that search box there and type in any term you want more information about. And then in the lower right-hand corner, you'll see links for YouTube, for Facebook and Twitter, guys, all kinds of ways to keep in touch with us, no matter what type of social online media you guys are using right now. So make sure you guys check out the blog, and the link is right below this video, guys, no matter where you are watching it. Let's see, 4 total trades today. We had one trade at the end of the morning, guys. We're going over some questions. We took the final trade this afternoon, 12:30 this morning. But you can see 4 total trades. We took 2 nice big winners, 2 small scratches, 65 ticks, 675 USD. Not a bad way to get our day started, guys. We're hoping to have another big week this week. You can see we had $3,300 the first week. We did $5,300 the second week. We've got $3,400 last week. So we've got almost $13,000 this month so far, having a huge month of June. We had almost $18,000 the month of May. So, guys, we're right on track right now, guys. Definitely the time to be trading with us every day in the live trade room, so make sure you guys come out and join us as an advanced member. What's the most important thing that happened today? Well, of course, on Sunday was Father's Day, so a lot of people are just starting to come back to the market this morning. Had kind of a sluggish start to the day. We expect Mondays to be slow because Mondays are always slow. The same reason why you and I don't want to get out of bed, or the same reasons why the rest of the market doesn't want to get out of bed in the morning. Overnight last night, we had some news from China. Okay, so last night the Chinese, Economic Council, they went to a float position on their yuan, and I won't go into too much detail about that, but basically China has had a fixed currency position for almost a century now, right? It helps their exports. Well, now that China has taken a floating position, that kind of shakes things up in the global economic environment. So that's kind of what got into the market this morning. The markets woke up groggy. They were sideways this morning, kind of looked like they had a couple too many beers with Dad over the weekend, and they waited for direction. So we had to wait along with it. Now, we always start with the dollar first, but we knew, of course, going into today's market, today was going to be a little bit slow because of that holiday weekend, people coming back and getting into the swing of things today. So we expected to see a slow market. We did pretty well with it. We made some money out of it. Let's start with the dollar. Now, you can see the overall short-term trend here. Now look at the dollar real quick, because the dollar tells a definite story this morning. We had the dollar come down, right? Short-term trend is down the dollar, so we have a short-term trend down, right? Trending down. However, though, look at this a little bit closer here, and you can see at these lows, we're really, for the most part, right, trading sideways. Okay, so we're not really trending down very much. What's happening is we're moving down, going sideways, moving down, going sideways, moving down, going sideways, right? That's what's happening right now on the dollar. So every couple days, we're going to be sitting there with these sideways, choppy environments. That's exactly where we are right now on the dollar as it kind of stair steps its way down on our slower time frame. So Monday morning, sideways dollar. You know, we're expecting, obviously, these things to get, obviously, it could be a slow day to start, right? Slow start of the day. Now, what happened was, with that information of China overnight, was it caused a lot of the markets, this is a good example on crude, it caused a lot of the markets here to initially jump up and then go sideways. We saw that on the euro, we saw it on gold, we saw it on crude, we saw it almost on every market today. The S&P, the Russell, they were all the same. And so what happened was, we had this, whatever news came out last night, sparked, right, the market up, and then you can see we really couldn't do much with it. Where we made our money was waiting patiently for the last move of the morning, right? That's where we made all of our money today. We had a nice big breaker pattern short on crude. We took a short on the Aussie dollar. We took a short on the gold. Guys, there were lots of great opportunities for us today, but we had to wait for them. Okay, we were prepared for this. We knew exactly what was going on. We were prepared for it, but let this be a good example of how some days you're not going to get your first couple trades the first couple minutes of the market. You'll have to wait until 11 o'clock, 11:30, maybe even 12 o'clock before the market really starts moving. All right, now, of course, we'll talk about that more tomorrow in Live Trade Room. We talk about how these cycles that the market goes through. Sometimes we see more volume at the open. Sometimes we see more volume at noontime, right? So every day will be different. It's all about looking at these cycles these markets go through. And right now, we're seeing the volume weighted towards the end of the morning, right? Today was no different. Let's grab a look at the first trade we took today, guys, on the euro. Now, we went from the euro to the gold, the crude, to the Aussie. A great selection of trades today. Euro, gold, crude, Aussie, didn't matter what market you were trading. We took trades on 60-minute charts, on 4-range charts, guys. I've been saying this for years. This pattern works. These patterns are universal. They will work on any market, any time frame, guys. It does not matter what you throw at this thing, guys. We can handle any situation the market gives us. Now, the first trade of the morning came on the euro. This was our classic two-step pattern long. So we got the short-term trend down. We bounce off the low of day. We mark up our swing high. Now, at this point, we actually had 2 swing highs here. I chose to take the higher of the 2 right there. We broke above the high here. 73 even was the fill. +4, 2 off there. As you can see, it then curls right back down and bounces us out here at +1. 2 off at 4, 2 off at 1. That's 10 ticks, or 10 times 12.50 per tick is 125 USD. Now, guys, this is one of those classic trades we look for every single day, called the two-step pattern long. And it's so simple. We come down, we bounce off the low of day, we reverse off the low of day. It is so simple, guys. It's called the two-step pattern, and it works very well at these extremes, right? The high of day, the low of day. And, of course, for all you members out there, come out and join us this week for training, and we'll talk more about taking these two-step patterns off the low of day. Now, here's a great example of a low-volume environment bouncing us out of a really good trade here, guys. And this was a little bit frustrating today on the gold, but our second trade on gold, nice big winner, right? Real big winning trade here, 23 ticks today on the gold. And you can see this is another two-step. Now, we had the high of day up top here, but this, of course, is now on a 60-minute chart. Right? A 60-minute chart is more for position traders, right? Day traders. Not going to be used for a scalper. So we kind of took off our scalper hat from the euro trade. We then put on our day trading hat, and now we look at the 60-minute chart on gold, and what do we see? We come up, we test the highs, we come down, we mark up our swing low, and we break below that swing low. There's your two-step pattern short, reversing off the high of day. Now look closely at this pattern. You can see when we took it, we actually got all the way down here, guys, to 52.8, and I had my stop placed at 53 even, and it missed, I'm sorry, my target. I had my second target at 53 even, and it literally went 53.2 right there, and then bounced back up and stopped us out. So we got short here, 1024. I took my first target at +10, moved my stop down to entry -1. Okay, we missed the second target by 1 tick. And then it reversed, came right back up, stopped me out, entry -1, and then you can see just tumbled right thereafter. This is a great example, guys, of we're not gonna get rid of our stop, right? I'm not gonna simply forget my stop and leave all the risk on the table. I've got to tighten that stop up, remove all the risk. If the market wants to run for me, I'll then be in a position where I can take. I'm still in the trade, and I can of course take advantage of that trade. But this is a great example. We saw it twice today on the Aussie and the gold, where we just didn't have enough pressure to push this thing down the first move. It didn't happen until later on in the morning. We'd already been bounced out of the trade, right? By the time this thing actually moved, this was at about noontime, right? 1 o'clock almost. By the time this thing actually moved for us, well, of course, we took our trade at 10:30, right? So we were well out of this trade. We knew exactly what was coming. We took the first target +10, 2 off at 10, 2 off at 2. That's 22 ticks. Right, and of course it bounces out early on very low volume. So a little bit of a frustrating trade there. This could have easily been, right, +10, +20, and then +10, right? We could have easily locked up 50 to 60 ticks on this trade, guys. But again, it just bounced out early. It happens every once in a while. If you got low volume markets like we're seeing today, guys, sometimes there isn't enough momentum to push this thing down. Even though we're in the trade, we still had to keep that stop there. We still had to make sure we managed our trade properly. Next up on